Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question for Bill, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. So without any additional delay, here's the host of today's program, Bill Bullington.
All right. Hey, I'm going to start off today's show just by talking about a Comic-Con. I think it's coming up. I think it's up this weekend. And it's going to be in Akron. I think it's the C.J. Thomas Hall down there. It's a Comic-Con. You go there, there's all kinds of comic book stuff. You have kids that might be interested in Marvel comic characters. There's a guy down there that draws a lot of them. Some DC comics too. That's actually going to be there. I think he's going to call in a little bit later in today's program. He's got a company called TSM Creations. He's an artist, does a lot of drawings. Just thought it'd be interesting, something to do if you're looking at things to do with children and kind of bored. I'm not sure what ages of children. Actually, I should preface that by saying sometimes these comics can get a little risque. not often, but anyway. So kind of neat that something like that's coming out. And from what I understand, it's a lot larger than it used to be. Anyway, I've got to try to connect to our company's network here. I can't pull up my internet, so I'm always lost without my internet. But I do also want to thank everybody that came to the workshop, seminar, rather, on Thursday. I thought we had a good time. We talked about a lot of different things there. We talked about momentum strategies, talked about being on the other side of value, talked about special opportunities that come up in markets and in stocks, and a price to sales ratio. And I've been working on a little video. It's going to be relatively short. That is incredibly difficult to do, by the way. To try to narrow something down just to the very basics without eliminating something that's important, that's a major trick, actually. And we are trying to do that with this little video on a thing called price to sales ratio, because it's a really good way of being able to do a back of the envelope calculation on what a company normally should sell for. And if you get good at it, it only takes a few seconds once you've done it a couple hundred times, which you'll do if you're going to be an investor. And you can kind of come up with a ballpark of how undervalued or overvalued a stock might be, and it only takes, a minute or two. So at most, by the way. So and if it takes you longer than that, it's just because you don't have enough practice with it yet. So we're going to a little video through that, again, trying to keep just those things that are most important and not include anything that is not important. And we'll be posting that up on the Bullington Capital website at some point in time. Also got another seminar coming up. Haven't actually selected the date. Probably be the last one that we do for this year. Do one more before the end of the year, and then right after the beginning of the year, we should do one. And I think things are looking up. I think economically things are looking up. Stock market valuations are not too overdone. That's a good thing. A lot of stocks that aren't worth what they're selling for, but not by a ton. It's not like they're overvalued the way they were in the year 2000 in the technology sector. That was amazing. I hope we never see that again, actually. But if we do, I'll recognize it, and I'm going to tell you, at that point in time, I'm going to start going short. I will start buying puts on things, as it'd probably be the only way that you'll be able to make any money. And we're a long way off from that. I mean, that is a long way off. At some point in time, that will probably be a fairly profitable way to make money, much more reliable. We're not there yet. In fact, if you take the biggest companies out of the stock market over the past 2 years, take the top 100, take the top 50 for that matter, and the performance goes down pretty dramatically. And last year, the small mid-cap stocks were down 25%. They were down 25%. at one point in time. That's a bear market. And I didn't really hear a lot of people talking about it. We didn't talk a lot about it here, but we did mention it. And so there are an awful lot of companies that are selling below where they would normally be selling in a healthy environment. And if the perception happens to change somewhere between now and this time next year, I think you see the S&P 500 probably up 15, 20% minimally. So that's where I think we are. And it'd have to be something unexpected and to be pretty negative, I feel, to get the market to go down at this point, because you've had a number of stocks that have not done well. I mean, probably 2/3 of the stocks that are publicly available have prices lower than they were 12 to 18 months ago. Think about that for a second. And that's not always going to be that way. At some point in time, that reverses. That's where momentum-based strategies have a tendency to do well, by the way, when that has reversed. You get a couple of years where GDP growth goes back to average. We've been below average 8 years in a row. Goes back to average, and those momentum strategies have a tendency to kick in and do pretty well, actually do extremely well. So I'm looking forward to that. Hopefully that day comes. By the way, if you have any phone calls, questions, or comments, call us 216-901-0945, 216-901-0945. That's dialing directly here to the radio program. If you're just picking up for the first time, welcome. We talk about mostly investing, and that's essentially what we do at Bullington Capital. We consult with a lot of other areas, and I've been putting together over the years networks of people to talk. If you want to talk to somebody about taxes, we got a guy, it's an enrolled agent I can refer you to. An enrolled agent, for those of you that don't know, is somebody who's passed a series of tests. They're very difficult to prepare taxes on an extremely advanced level, but he works mostly with individuals, so that's one of the reasons I like to have him. There's a lady that does estate planning for people that don't have estates that are in the millions of dollars, and I've got a estate planner for people that do. And so we've got the taxes, estate planning stuff. We're looking to add to that. And so if you want to contact me, I am in contact with one person. I actually haven't talked to him individually yet or over the phone yet. So I'm going to meet with this guy. He does health insurance, and that's a big deal. When you're in retirement, I want to make sure that the people that I'm referring people out to are going to do a good job. They're going to basically do what they tell you they're going to try to do and shop for you. They're not captive. They're not held or restrained by the companies that they work for. They can go out and do what's in your best interest. And I feel like that's really important. So anyway, that'll cover all the major areas, really: taxes, estate planning, your medical care costs, and we do the investment side. The last part of that is budgeting. And that's one of the areas those are the major areas when it comes to financial planning that you want to pay attention to. The first and most important, for you young people out there, is learning to live beneath your means, not within your means. You've got to learn to live beneath your means. Living within your means means you're not going into debt every year. Living beneath your means you're saving. And to me, that's relatively simple. You just add up your expenses and you look at your income. If your expenses exceed your income, you need to cut back on your expenses. Kind of like dieting, eat less and exercise more. That's pretty simple. Same thing with that. So financial planning, I think, is a little overblown. And they're trying to get their focus oftentimes on things that really aren't that important. If you're not living beneath your means, you're going to have a problem one day. It's that simple. And that's relatively simple to do, to figure out how much you need. If you don't, we've got a spreadsheet. We can give it to you. It's a budgeting spreadsheet. Call us. Email us. I'll be glad to send that out. Second most important thing you're going to do is learn how to manage your money. Learn how to manage the investments. You need to know a little bit just to be able to understand what the common mistakes are that the vast majority of investors make so that you can avoid them. And that's what we work on. And I think it's the second most important thing that you can do. The first most important thing you can do is live within your means or beneath your means. Sorry, I just said what I told you not to say. So, and the next thing is the investing. And taxes can be a big part of that, but shouldn't be the thing that drives it. And for some people it is, and they're making a mistake, quite frankly. When paying the least amount of taxes you can possibly pay is affecting your investments, and then you're not making as much money as you should be in your investments. You're just not. There are things that you can do about that. We've been talking in the past few weeks. There are these new types of annuity products. They're called investment only. They don't guarantee principal. They don't guarantee death benefits. They don't guarantee income levels. And they don't charge you for it either. And when you look at how much those things cost and how much they typically detract from the overall return of the investment vehicle, you'll know why I'm not a big fan of those. And one second, I'm going to change my headset here. All right. Not sure that's a whole lot, but yeah, that's better. So you get this investment-only annuity contract, which I think is really you get tax deferral. It's the least expensive. There are two really inexpensive ones, depending on how much money you're putting into it. One might be better than the other. I'll just go for the first one first. It's $20 a month. That's the admin and expense fees that the insurance company charges, and it's $20 a month. Doesn't matter if it's 10,000 or $1 million. It's only $20. Over 300 funds to choose from, every category you could possibly imagine, and they're institutional funds, which means they have lower expenses. So that's the lowest cost. That's the no frills. The big benefit from that is tax deferral. If you've got money that's invested and it's invested this way, you don't get a 1099 until you start to take the money out. That's a pretty big deal. If you take money out before 59.5, you have to follow certain guidelines so they don't hit you with that 10% penalty tax on your earnings. When you do start to take money out, there are still tax advantages because they look at you could take money out before you're 59.5. You have to stay within certain guidelines to avoid any penalty taxes. And a portion of the money that you take out is going to be counted as original principal, even if it's all gain. So if you want to learn more about that, please feel free to give us a call. The next workshop that we do, we will spend 15 minutes talking about that because, quite frankly, that's all you need to talk about it. The difference between that and having a mutual fund account, a bunch of mutual funds in it, stocks, bonds, cash, real assets, whatever you want. This thing's got over 300 of them, every category you can imagine. The only difference between that and a regular mutual fund account is that a mutual fund account, you're going to have to pay taxes on everything. And this one's basically tax deferred, and you're paying $20 a month, and you're getting the institutional rate on the underlying fund. So you can't get those as a retail investor. It's saving you money. And we actually manage those. We charge a fee for management, but you don't have to have us manage it. You can do it yourself if you want to. So next workshop that we have, we're going to talk about that. If you'd like more information on it, feel free to go to my website and just fill out the contact us form. Say, yeah, I want to know more about that investment only annuity. If you have an annuity now and you want us to compare it to that, feel free. Give us a buzz. You can send us a copy. Actually, if you know exactly which product you have, I can look it up in my database anyway. And we'll give you an accurate comparison. So at least you know. And that's a free service. Because I know there have been an awful lot of annuities sold over the years. They've changed over time. They're all different. There are thousands of different types of annuities out there. Literally. There are literally thousands. Almost as many as there are stocks. So if you're not sure what you have, maybe you're not that happy with the way things are going, feel free. We'll tell you an analysis for you. There's no charge for that, and I'm just going to tell you like it is. By the way, I'm not going to tell you what you want to hear. I'm going to tell you like it is. Now, if you want to hear, the truth, then you're going to hear exactly what you want to hear. But if you're looking for something else, when I say that, there are a lot of products that are being sold. People are making promises that basically aren't going to be able to be met. And oftentimes it's not even a salesperson's fault. Oftentimes a company tries to do something and they just fail because what they're trying to do is not possible. If you're trying to provide returns today that are guaranteed, that are over 3% when the 30-year Treasury is paying 2.6%, and you still have to pay all the people that work at your firm, and you have to pay the people that are selling that product, meaning you have expenses. People say there are no fees for this. Nope, there are fees, and there are management fees. There's no free for that fee advice that you're getting. An old joke. Never mind. Anyway, again, just feel free to give us a call. I don't really want to pound on this too much, but there are a lot of products out there. We'll be glad to take a look for it, look at it. We'll be glad to get you an opinion, tell you whether or not you think you can. We think we can help you out there. A lot of cases, if you do have those benefits, death benefit riders in particular, you can still keep the death benefit, do a partial 1035 exchange. That's a transfer of assets, so that it allows you to keep some of them, keep the death benefits, and then you can reinvest the bulk of the principal somewhere else at much lower expenses, so you end up making more money. And again, just feel free to give us a shout out, contact us. We'll be glad to do an analysis for you and tell you whether that might work for you. If you have taxable mutual fund accounts, and you're worried about the Medicaid, Medicare, all those surtaxes, the health insurance thing, there's a chance that deferring some of the taxes, or even if you're taking money out of them because you're getting treated differently in an investment-only annuity, it could lower the taxable income you have to report and reduce those taxes for you. So there are all kinds of things that you can do, but again, we won't know until we actually take a look. And if you'd like to call in and ask about it, that's fine too. Number here is 216-901-0945, 216-901-0945. We'll be taking a commercial break here in just a couple seconds. But if you want to give us a call after the commercial break, and you can also email us, incidentally. You can email us, bill@bullingtoncapital.com. I do check my email during the radio show, so some people like to send me a quick email, ask a question. If I can answer it, I'll be glad to try to. And it's just it's an amazing world, isn't it? You can be out there. I used to, I won't do that anymore. Don't text me. Now they hear the music, that means we are taking a commercial break. You're listening to Bill Bullington right here on 1420 The Answer. We'll be back after these messages. All right. Eddie Money. When's the last time you heard from that guy? Yeah. Anyway, feel free to give us a call, 216-901-0945. If you have a question. And it's funny, I hear that guy doing the same thing I'm doing. He's talking about annuities. I have a feeling, though, he's probably selling the equity index just from the tone of the commercial. But if you'd like to call, 216-901-0945, 216-901-0945. And I do want to remind everybody, too, I think it's this weekend, there is a Comic-Con. And I think that's Michael. He's actually one of the artists that's going to be exhibiting there. Hey, I'm going to try to pick up his phone call as soon as I can. And, excuse me, but... All right, you got to put him through. Anyway, there's a Comic-Con. And I believe it's this weekend, coming up this weekend, and it might not be. Let's see. Michael, are you there?
Yeah.
Hey, how you doing?
Fine.
All right. I was just talking a little bit about the Comic-Con. You'd mentioned it to me this morning. I thought it would be kind of interesting to let the listeners know, because I'm always looking for something to do over the weekend. Is that this weekend?
No. It's 4 weeks from this weekend. It's November 5th and 6th. At E.J. Thomas in Akron. I think it's some it's like 10 to 5 or 10 to 6 or something like that. It's $15 a day. I think you could get a pass for the weekend. I don't know what that is, if it's 20 or 25 or something like that.
Okay.
But it's gonna be pretty big. And I know that way back in March or whatever, he already was booked up on guests and vendors and stuff. So.
Oh, that's cool. The let's see. Is that are they calling? Oh, no, they're not. I just did a real quick Google search, and it looked like Pensacon, but I think that's not it. That must be
no. It's if you look up Akron Comic Con, it'll pop up real quick. It'll be the first thing.
Okay, I'm going to do that really quickly here. There it goes. Yeah, this is cool. Yeah, that's awesome. I was a really big comic book fan. The person that we're talking with right now, his name is Michael. It's is it Perzak? Perchak. Okay.
But yeah. I won't quibble. You can call me Perzak.
That's okay. And he's an artist, and you're going to be exhibiting there, right?
Yeah.
Okay. And he does some really good work, some just high quality work. So if you're a comic fan, if your kids are comic fans, I would go to that, just AkronComicCon.com actually, and find out more about it, because this is pretty cool. I'm amazed that they've got an event.
Well, I'll be there with a booth and a bunch of originals and prints of originals, and I take custom orders, and you can have yourself drawn as a superhero. And if you want something I don't have, I can do that for a small fee. Well, maybe not such a small fee, but a fee.
Right. Sure. Absolutely. And I'll tell you that the quality of your work speaks for itself, and they see it. They'll appreciate it, I'm sure. I'm glad to hear that something like that is coming here, and it's at the John Inez Convention Center. So I guess that's going to be pretty big.
Yeah, it is. It's 5 times larger than it was last year. It was at Quaker Square last year.
Wow. So I guess it's going to be getting much more popular. Well, that's awesome. So it's AkronComicCon.com, and then you can go. What's your web address?
My website is tsmfinearts.com.
Okay, tsmfinearts.com, and you're going to be exhibiting there. Great. Thanks for calling and letting me know about this, because I really like this kind of stuff, especially on weekends. Oftentimes, there's not a whole lot to do, particularly for people like me who don't watch football anymore. And it has nothing to do with the Browns, by the way. Yeah,
Well, I'm with you. I don't watch a lot of sports, and I don't watch football. So, it's a weird thing for a lot of guys. You're like, what?
Yeah.
Well, I don't.
I will tell you this.
You will see things at Comic-Con that you won't see anywhere else. I mean, you see people dressed up as comic book characters. Last Comic-Con I did, there were women dressed up as male superheroes and male guys dressed up as female superheroes, which I got to tell you, that just doesn't feel right. But anyway.
That's okay. Yeah, I understand.
But thanks again, and thanks for having me on. I'll call back in the near future, and maybe we'll find something else to talk about.
Absolutely. That sounds good. I appreciate it. Have a good weekend.
Yeah, you too. Thank you.
Bye-bye. So November 5th and 6th, AkronComicCon.com. That is cool. I don't know how much you like that. Some of you folks that have been listening to this show for forever remember when I used to talk about Marvel Comics. It was one of the better performing stocks we ever had. And nice story. I was watching. I go to most movies, or I used to go to all the movies. Now I go to a lot of them, probably more than half of them. Not anywhere near what I used to. But this movie came out, and it was on a character called Blade. And when I was a kid, I was a big comic book fan. I liked Marvel Comics over DC. And I'm looking at that going, Blade? Like, he's like way down on the list. He's not Spider-Man. That's not the Hulk. Captain America, Iron Man. This guy, Blade, why are they making a movie on that? And what had happened was Marvel had gone into bankruptcy because they had tried to make their own movies, but they couldn't get any distribution. And the movie business is tough. The vast majority of movies are not blockbusters, and a lot of them fail to make the money back that they spent on making the movie. So Stan Lee, the owner of Marvel Comics, is basically in bankruptcy reorganization. A couple guys that were Hollywood insiders got a hold of the company. They got control of the company. They started licensing the movie, and the first movie that was made was Blade. And they spent $50 million. Wesley Snipes was Blade. So I see it. I have to go see it because I know who Blade is. He's like, out of the 30,000 characters, he's down there in probably in the top 10,000, which is not saying a lot. Not in the top 10 for sure. And I like the movie. Chris Christopherson played in it. It was kind of wild. Most people know him as a country music singer. What they probably don't know is that he was an academic. Anyway, that's a side story in and of itself. And they spent $50 million on that movie, and it grossed $1.3 billion. They spent $50 million. And so I'm looking at this, and Marvel had come up on one of my scans. And so I was looking at it. It had a really cheap valuation. This is how I found out all this stuff, mainly because I was watching movies. When Marvel came up on my screen, I'd recognize it because I saw the movie. I thought, oh, that's interesting. I can't believe Marvel's making a movie on Blade. So you never know. And incidentally, from the time that I made that first purchase until they got bought out by Disney a few years later, it went up about a little over 1,000%. So, was not a straight line, by the way. It had a correction along the way that was about 2/3. So it didn't go straight, up tenfold. In fact, if you purchased it a few months after I'd talked about it, when it had that 2/3 drop, you were underwater for almost a year. Then it came, screaming back, and eventually Disney bought them. The moral to the story is, pay attention. And if you've got that price to sales ratio thing down, thing I talked about a little bit earlier in today's show, talked about it last workshop, we're putting a little video out on it, self-instructional manual on how to use it. You could say, oh, hey, not only do I like that company and I like what they're doing, but it's underpriced. How cool is that? That's where you can make some money one day. In fact, one of the things I did want to mention, too, it's really funny. So I rebalanced at the beginning of every quarter. We have to do the dividend model. And I rebalanced the dividend model. And Bristol-Myers came up. Bristol-Myers is now in my portfolio. The reason I'm bringing this up was we had a caller last week that asked me about it. And I looked at it and I go, well, it's not terribly exciting because it's not grossly undervalued. That's what I really like. I really like the cheap ones, the ones that are good and cheap. Normally, if they're good and cheap, there's a good reason they have a problem. Okay, but that's the way I like to do a long-term investment that I'm going to make, or I like a stock that's running, that's moving really fast. It was doing neither of those. It's not super cheap and it's not running really fast. But the dividend yield is one of the top 4. It's one of the top 4 highest dividend payers as far as a percentage yields goes in its sector. So we own it. I actually own that stock now. I thought that was hilarious. Guy calls in, asks about it. I look at it, and then it pops up in the screen that I run for this model, and now I'm an owner of the stock. So someone has BMY, by the way, and I wouldn't own it if it weren't in that model. I'm like I said, I typically like my stocks a lot cheaper or with a lot of momentum. This one just happens to have a dividend yield that's higher, which is one of the key criteria to that particular model. It looks at the dividend yield. That is a very good model, by the way. I love that model. And it's a lot easier to do, a lot easier to participate in, and it's a lot easier to manage, I think. It's not easy for an individual to manage, although you could do something very similar to what I'm doing. I don't know, maybe I'll put that little ebook out there too. And you could actually only rebalance the portfolio once a year. It has better than market performance, or it has had. You're not allowed to say that, it's going to do that in the future. You can't guarantee that. But it has had better than market performance over the past, actually 5, 10, and 20 years. And we'll talk about that in more detail. Right now, I got to go to the phone really quickly. I've got Daryl in Broadview Heights. Hey, Daryl, how you doing?
I'm well, thank you. You're sounding terrific.
Oh, thanks.
You feel as good as you sound?
I don't know. Yeah, I can't hear myself.
I have that trouble, but I have hearing aids.
I really like this soap, though, that I keep using from the company that you're probably calling in to talk a little bit about, I would think. But,
oh, yeah. Yeah, I got a great product, but you can't restore hearing. Once you've lost it, it's gone.
Yeah, that's true.
Oh, well, that's great. But I do have a financial question.
Sure.
If I may. Tell me your thoughts, and this is probably a question that requires a lot more time than you have to give to me right now, but your thoughts about life insurance as an investment.
As an investment, the life insurance products that you can get as an investment are generally not that good. quite frankly. The cost of the insurance administration cost is high enough that it eats into the returns on the underlying cash value. So I wouldn't buy life insurance as an investment. Now, there used to be some products that were pretty good. Most of them have gone away. They've literally gone away. It got so the mutual fund expenses have dropped by so much, and are not paying enough for these guys to run mutual funds inside of a life insurance portfolio, and the interest rates on fixed accounts are so low they just can't make any money. So what ends up happening is the expense ratios on all the life insurance products have gotten so high that if you're going to use it as an investment, it just typically just doesn't make a lot of money. Now, there are other reasons to buy life insurance. So, but as an investment vehicle, I'm not a big fan. The fees are just much too high anymore.
Well, I have a situation where I've got a close personal friend who owes me some money.
Right.
And we don't have a legal contract on it. It's a handshake deal.
Sure.
And I'm concerned that should something happen to him, I don't want to have to deal with his children about trying to get repaid.
Right. In that case,
the life insurance policy, would that be a good idea to have a policy on him? Yep.
That's called a buy-sell agreement. And that is not really an investor. I thought you were talking about you investing money in a life insurance policy as an investment to get a return on. What you're talking about is completely different. And that's a good idea. You should do that. I would do it. And, if he's amenable to it, then, cause he has to agree, cause he has to sign the application as the insured. And, you're not allowed just to take out a life insurance policy on people without an insurable interest, and having a loan is an insurable interest.
Mm-hmm.
So, you would have, if he doesn't mind, I would say, we need to do that. And I think that...
Well, that's pretty cut and dried. That's pretty simple.
Yep.
Okay. Well, in that case, can I tell you about Nutriskis.com?
Yep, absolutely.
An opportunity for somebody to have a little mini office outlet from their home, work on their computer, whatever amount of time they want to put into it might indicate what kind of returns they'll get. The training is free. The look-see is free. Doesn't cost anything to look at it.
Right.
And we've been with the company for 35 years, and we're expanding our marketing to using the Internet so that people don't have to talk to their friends or their relatives or try to sell their friends or relatives products.
Right.
So they can learn about it at Nutriskis.com. That's N like Nancy, UTRISKIS.com, Nutriskis.com.
That sounds good.
And I thank you so much for the opportunity to tell people about that. Thanks for the insight about the insurance policy on my friend.
No problem. Hey, have a good weekend. I'll probably talk to you in the next few days.
I appreciate that. Thanks a lot, Bill. Happy day to you.
You too. Bye. Yeah, it's pretty cool. It's multi-level marketing, by the way. The thing I like about that is you don't have to have anybody's permission. They don't have to hire you. And I use this one soap product. It's mind-boggling. It's biodegradable. It's unbelievable how long it lasts. You buy this bottle, it's 16 or 18 ounces, something like that. And you use like a half of a teaspoon per 16 ounces of water, and that's for the more tough stains or cleaning that you want to do. But anyway, Nutriskis.com. I think that's a great idea. And by the way, I did hear Assistus Furniture commercial a little earlier. If they're having a sale, you need to go check it out. Their normal prices are pretty low. When they have sale prices, good deals. They're trying to move that inventory so they can get next season's furniture in there. It's a great time to be shopping around there. And I think I have a few seconds before my next commercial break. When we come back, we'll be talking about some individual stocks, and a lot of people like to do that. There's some pretty decent chart patterns look like they're forming. That's exciting. The market has been improving somewhat. Most investment strategies are somewhat cyclical in nature. Momentum-based strategies tend to only work well under certain conditions. Those conditions have been slowly improving and in favor of the momentum models. So when we come back, we'll tell you how to identify individual stocks within those models. You listen to Bill Bullington right here on 1420 The Answer. Be back after these messages. And we're back. Hey, you're listening to the Bullington Capital Report. I'm here every Saturday morning from 11 to noon. It is actually broadcast again tomorrow night, 6 o'clock, 12:20. You can find us on iTunes, and you can go to my website, bullingtoncapital.com, and you can pick up the show there. Actually, those shows, radio station, we cut the commercials out when we put them up on my website. That's just makes it a little bit shorter. Anyway, if you missed it here, you can pick it up there. And right now, I'm gonna spend a few minutes talking about the individual stocks because it's been improving. Most stock strategies are extremely cyclical in nature, and the cycles can last for several years. That's what's so frustrating about the stock market. You can be doing all the right things and still losing money. Believe that or not. A lot of people have a tough time believing that. I don't think they will find out. They're going to find out. If they do it, they're going to find out. The truth does not need defending because it reveals itself over time. So most are pretty cyclical, and the momentum stuff has been out of... The reason I'm talking about it so much is because it's been out of favor for so long now. It's underperformed for an incredibly long time, and all the economic, at least, indicators are lining up to help support what causes that strategy to outperform again. And I don't know when it's going to happen exactly. We've got an election coming up. That could be a catalyst. We've had 8 years in a row sub-average growth. That could be a catalyst. We've got a lot of new products and inventions, not intervention. A lot of products and inventions that have come out that are going to improve people's lives. That could be part of the catalyst. And my gut feeling tells me they're all going to be working together. And so you want to pay attention because that style, but when it comes, man, it does not give you a warning, and it takes off. In fact, I run two of those. I run a model like that. I run two models like that. One's an ETF model. That's actually we gave the exact parameters of one that's very similar to mine, probably 80% as good as the one I use, or at least it's been in the past. And I watch them flip-flop just because I brought it up. But anyway, we talked about it at the seminar, and I gave it away. Will I give that away in the future? Nah, I'm probably going to sell it. $10. It's really simple. And I'll make little videos and show you how to set it up online so you can follow that yourself. But you're still going to have to put up with the fact that these things come in and out of favor. And when they stay out of favor, it can be 3-4 years in a row. When they're in favor, you might only get 1 or 2 years or 18 months. And God help you if you miss that. You go 3 or 4 years of suffering, then you give up on it, and then, of course, it takes off and you miss it. So you're adding insult to injury by doing that. So you don't want to do that. In your portfolios, you're picking funds, you're picking individual stock portfolios, whatever you're doing, try to mix those up. The high dividend is a value-oriented model. The momentum is basically based on speed. How fast are these stocks going up? When the market's going up fast, when it makes a big gain in a short time period, those momentum models have a tendency to scream. Not always, but a good percentage of the time. The fact that they've been underperforming for so long, to me, is very encouraging because the outperformance is probably going to be fairly large. In fact, one of the momentum models that we run, I think it was about a week and a half ago, the entire portfolio, this is not a stock, the entire portfolio was up 5% in one day. That's what I mean by not trying to time that up. If you were trying to catch that or predict that, good luck. Yeah, you're going to miss it. So the real answer is have some of your money invested that way. Have some of the money invested in the deep value stuff. That's the real answer. That's what I like. For the international emerging market, we have an ETF model, very similar to the one I gave away at the workshop. One that we'll actually be publishing online here shortly. So if you missed it, you can buy it. It's going to cost you $10. I figure it's got to be worth at least 2 cups of Starbucks. It's actually worth a lot more than that. I'm being generous in keeping the price really low, so just about anybody can afford it. And incidentally, that model, anybody can afford, and they can run it. You don't have to have a lot of money for that. Some of these ETFs, I believe most of them you can trade commission free, and I think it's through Fidelity. So I'll double check before I publish. I'm pretty sure you can do it. So anyway, and even if you can't, you can still afford it because the transaction fees are nothing. They are so small today, you might as well say free. But that's another issue altogether. And I didn't get any calls from people asking questions today. You know how hard that makes the show, sitting an hour and talking to yourself? So feel free to call in and ask us some questions. And I meant to mention again about the Bristol-Myers Squibb. That was pretty interesting. Forget that stuff. I'm going to go to the scans. All right. And here's one of the things that you can work on at home. This is another course. This one's not going to be that cheap. This one's going to be more like $100. And 'cause I don't want you buying it if you don't plan on using it. And if that's going to scare you off, then good, because you're going to lose a lot more than $100 not knowing this information. So it's a good investment. Anyway, there's a company, and I'm just going through the symbols and the share price movement. That's key for a lot of this stuff. Just the symbols and share price movement. And I would look into what they do. I'm looking at their price to sales ratios, something we talked a little bit about at the seminar. We'll be talking about it again in the future. This has a low price to sales ratio, 0.21. The average for the industry that it's in is closer to 1. The average of the S&P 500 is 2. So 0.21, that's pretty good. Anyway, the symbol is TPC. Tutor Perini Corporation. Now, most people are going to start studying this thing, and they will study this so much. If they remember to buy it over the next month or two, it's probably going to take off without them. Or, if I were to buy it, it's probably going to stop me out right away. I'd have a small loss. And that's kind of the key. If you're going to trade momentum and you're going to pick stocks instead of having your model pick the stocks, if you're going to pick them individually, you got to concentrate on minimizing your losses. That's the number one key. Minimize the losses. The next thing you got to do is pay attention to the process. Forget the results. And that goes for value investing. That goes for the quantitative model-based any type of investing. You do not want to pay too close attention to short-term results. You want to pay attention to the process. The reason I'm taking this tone of voice is it's important. It's important that you understand that. It's important to realize you're not going to beat the market every year, every month, every quarter. That's not going to happen. And by the way, generally, the bigger the increase in your average annual returns over time, the longer you have a tendency to underperform. To underperform 3, 4, 5 years in a row, not uncommon, which is one of the reasons that so few people ever manage to do that. That's the number one reason. That's why I like to have both value and momentum, the two together, because one of them is generally working better than the other one at any given time. And if I knew exactly which one, I own a fleet of jets. So you hold them both, and then you rebalance those portfolios. That is key. It's big time key. And it's also important that you understand, again, incidentally, if both of those strategies are doing poorly, it's because the entire market's going down. You'll be glad you have some money in short-term bonds. So, and that's it. That's all you need. Do you know that strategy puts you in the top 20% of all professional investors and in the top 3% of individual investors? That simple strategy. There are three aggregate bond index. If you don't know anything about bonds, I don't run the aggregate bond index. Actually, we've managed to outperform the aggregate bond index, which puts us in the top 5% of professionals. And it's not because I'm smarter, I'm smaller. And I know it. I'm smart enough, and I know it. And we'll talk about that next week. But the momentum stuff tends to go out of favor. They all tend to go out of favor. Sometimes 3, 4, 5 years in a row. Man, is that hard. And typically when it's out of favor, when momentum's out of favor, the reason it's out of favor is value is in favor. When value's out of favor, it tends to swing back towards momentum. If momentum and value are out of favor, it's because market's crashing. Then you're glad you had those bonds. So I've got all your bases covered. There are no other bases. That's it. That's it. You got that? You got value, you got growth, and you got crashes. So you got value strategies and momentum strategies, and you have bonds. Getting back to the momentum. I know I'm killing everybody not talking about this. So TPC looks pretty good. BGFV, I think I'm going to buy this one. I have an account. And in fact, now that I said that, I'm going to have to buy it. I'm going to buy this stock. It's share price $15.74. I don't know what I'll get because I'm buy mine on Monday. If it goes down 10% from my purchase price, I'm going to sell it. I'm going to take a loss. I'm not going to put more than 2.5% of my money in that. Why would you say 2.5%? Well, because 2.5% is 10% of 25%, and 25% is my trading account. So I'm putting 10% of my trading account in there. And by the way, if that goes up 10% inside a week, I'm going to double it. I'm going to have 20% of my money, 20% of that trading account in that one stock. Not how many stocks do you have to watch? Not many. And if that sucker runs, I'll be happy. And Big Five Sporting Goods, the price to sales ratio, 0.33. I think Dick's Sporting Goods is closer to 1 times revenues. I'll have to double check that. In fact, since I brought that up, I'm going to pull this up on Y charts. Symbol is DKS for Dick's Sporting Goods. Very similar. Market cap, it's almost 1. How'd I know that? Because I've been doing this for a long time. Anyway, when your price to sales ratio is 0.33 and your nearest competitor is 1, that's a pretty good idea. It's undervalued. Symbol is BGFV, by the way. And if you missed it, play it back on iTunes. You'll catch it right near the end. I hear the music. That means I got to go. You've been listening to Bill Bullington. I'm here every Saturday morning from 11 to noon on 1420 The Answer. Thanks for listening, everybody. Have a good week, good investing, and good luck.
Another episode of the Bullington Capital Report, broadcasting every Saturday morning at 11 a.m. on AM 1420 The Answer. If you have a question and would like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or contact him through his website, bullingtoncapital.com. That's bullingtoncapital.com.
Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and or investment strategies recommended and or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
The preceding program has been paid for by Bullington Capital Management, LLC.
The preceding program's views, claims, or representations may not reflect those of AM 1420 The Answer or Salem Media Group.